Bloomberg's Eric Martin is here to talk about diluted corporate profits. But before we get to that, since you work on the stocks desk and cover this market, the equities market for us, what's been going on in the last 10 or 20 minutes or so to give us this flip?
Matt, we've seen a huge turnaround in the S&P 500 in the last 20 minutes. Talking to a lot of traders, messages coming in from different brokerages, pointing to the light volume today as an easier market to be pushed around by news, and comments out of economist Paul Krugman saying that the recession may end by September has been one of the bigger critics of the Obama administration's handling of the recession and the downturn. So if he's turning more positive, a lot of people are seeing that as a potential sign that the worst may be over.
He's not Dr. Doom himself, but he's not far off, right? And the two, I think, have worked together in the past.
That's true. He's been somebody who's been a critic of the approach that the administration has taken so far, and so to see him coming out and talking about a turnaround in the economy is definitely positive news to these trading desks.
All right, let's get back now to profit dilution here. The American equity is increasing for the first time in 5 years. You wrote a cool story about that. We've seen a heck of a lot of shares sold, I think 50, 60, 70 billion dollars in the last 6 weeks, right?
Right. This was a study that I did with my colleagues on the stocks team, Michael Song and Elizabeth Stanton, and we looked at the amount by which dividend cuts, the most since the 1930s, and secondary offerings, many of them as a result of the stress tests that the government performed, are diluting returns on equity for the rest of the year. And that's been something a lot of people are starting to pay attention to. The flip side of that argument is that many of these stocks, after doing these secondary deals, are continuing to rise. We had the biggest rally in the S&P 500 since the 1930s, 39% off the bottom. So a lot of investors are saying the corollary to that is that if these shares are coming to market and people are still buying, it's a sign that the stocks were so undervalued that even the dilutionary effect of these offerings isn't having a huge negative effect on the capital appreciation aspect.
It's also got to convince a lot of boards, hey, maybe it's a good time for us to sell stock now too, right? Get on the bandwagon as long as this window remains wide open.
Absolutely. You're seeing a lot of companies, not just in the financial area, but elsewhere as well, that were unable to tap the frozen credit markets last year, bringing shares to market. So part of that is that you have increasing supply with constant demand, and so there's a question of will that decrease the value of the shares currently held by investors? If you're an investor or the holder of one of these banks, you don't like to see the supply rising.
You could argue that perception is great right now because investors are accepting these secondary offerings, but the operating picture is not as good because they're all cutting dividends, right?
That's true. We saw dividend cuts, but some investors would argue that those have been reflected by last year's 38% drop in the stock market. So a lot of that being discounted potentially, looking for earnings going forward, and the market looking for, perhaps because these stocks are continuing to rise, a rebound in earnings when we get into 2010.
All right, Eric, thanks very much. Always a pleasure to have you on. Eric Martin covers the stock market for us for Bloomberg News.